Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was November 4th, 2009. Of course, today was FOMC day, so big Fed announcement here today, 2:15 Eastern Time. Before we talk about the trades we took today, I want to remind you guys of our free resource online. Head to our YouTube page, that's /School of Trade. And please guys, subscribe to our YouTube channel, and please rate and comment on this video. We put 19 ticks, $190 in the pocket this morning. Brings our weekly total to $1125, so $1,125 for a weekly total here in the first week of November. The term today is follow through. Now, this is a term we go over all the time in our live trade room. Why didn't you take that trade? Why did you avoid that trade, right? What were you looking at that I didn't see? And of course, the answer is follow through. Did you see the follow through? Now, what is follow through? Well, it's a term used to describe a movement in price that continues off increased participation by traders in the direction of your trade. You'll hear me say things like, I need to see follow through on this move to enter the market. Now here's what follow through looks like, and then of course we'll talk more about it here once we're done looking at it. Of course, first of all, this red line is going to be overhead resistance, and the short-term trend here is up. So of course we're going to be looking for what we call our breaker pattern here when we break above that overhead level of resistance. So price breaks above this red line. After it was, of course, stopped the first time, we see the first 1 to 2 ticks go by. So we get above that red line, 1 tick above, then 2 ticks above. Now remember guys, the first 1 to 2 ticks here are what we call the noise. This noise is based upon all the sellers having their stops being run, right? All the buy stops there. The buy stops start firing off 1 or 2 ticks above that red line. That of course gets other buyers interested in the market. You've got the rookies, right? The guys who can't wait patiently, they jump in early. So the first 1 to 2 ticks are obviously stops being run, rookies being induced early, and basically what we call the noise. Now the first 1 to 2 ticks, this is not the follow through yet. It's what we see after those first 1 to 2 ticks above that level of resistance. Now once we get through those 1 to 2 ticks, we begin to see those new higher highs. They're running all the stops here, all the rookies in already, and price now begins to explode on follow through when the majority of the market now jumps back in. Back to the first 1 to 2 ticks, we're not totally convinced yet. We are looking for a trade here. We're looking for that explosion, but in the first 1 to 2 ticks, we haven't seen that big explosion yet. After, of course, we see the buy stops being triggered, after we see all the rookies jump in, then guess what happens? People like you and I, day traders, we say, hey, is price breaking above that resistance? Maybe I too should get involved alongside. Well, guess what? The mass majority of the market now begins to see the price is breaking through that high. It's not being slowed down by the noise the first 1 or 2 ticks. And so now we're above the noise, right? 3 or 4 ticks up, and now price begins to explode, quickly and violently jumping to the upside, and that of course is what we look for follow through. So the follow through is that confirmation of the move after those first 1 to 2 ticks. That really shows us it's not just the buy stops, it's not just the rookies that are making this thing bounce. We're waiting to see the rest of the market jump on, which of course will mean increased pace to tape. Momentum will be pointing up for this long trade, large buyers as opposed to large sellers in this case. And of course, that is all the confirmation for the follow through we need to now jump into that trade. The key is don't jump in too early, right? We don't want to get caught up in that noise. Now, this is what happens if we jump in early and we don't see any of that follow through. We see this sideways kind of range bound choppiness here as price tries to figure out who has control and gets bounced up and down around this red line here. So if we don't see any follow through, you'll still see the same 1 to 2 ticks above that red line, but then rather than seeing the explosion, we'll see momentum curl back to the downside. We'll see the pace of the tape begin to slow down. Large sellers rather than large buyers. So we start seeing definite signs of a reversal coming in. So no follow through, no confirmation on the entry for the long trade, and of course we expect now that the buying of course will quickly subside, replaced by sellers, momentum curls back over, and we begin to look at price deteriorating to get ready to flip to the opposite side. Now when we don't see any follow through, for example this long trade here, remember the sellers now are going to feel that. Everyone else in the market is going to watch this and say, look, 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 look. The buyers couldn't get the job done. The sellers then, the blood's in the water, right? They can smell the opportunity right here. The sellers will jump in and grab this price quickly and start bringing it back down. Now, thankful though, we have a pattern that actually capitalizes on this failed follow through. It's called our two-step. right, called our two-step. And of course, our two-step pattern being a counter-trend trade, we look for the lack of follow-through to know to look for a two-step, right, in the opposite direction. We look for the follow-through, right, going back a couple slides here, we look for follow-through, of course, to confirm the entry, right? One of the big confirmations for an entry is seeing that explosion, seeing that follow-through, which tells us this move is there and it is moving. If we don't see the follow-through, we begin to see this very sideways choppiness, right? Price action slows down, momentum curls against us, and we know to be very careful. So guys, follow-through, it determines if the move will continue. It confirms our entries. Now we use time and sales window, the tape, as well as the pace of the tape indicator to look for patterns. We're looking for speed. We're looking for the size of the orders, the buys versus the sells, to see if we're seeing any follow-through. So price breaks above that red line, we're looking for buy, buy, buy. If we don't get it, there's no follow-through, and we're looking to the short side. And as always, guys, can't talk about follow-through without talking about the pace of the tape indicator. Look for those easy-to-spot patterns, guys, on your pace of a tape indicator. As always, guys, we're going to show you guys how to look for follow-through every day in our live trade room, so come out and join us. If you're finding yourselves getting into a trade early, or maybe even getting in too late, either way, guys, definitely want to come out and join us, and we'll show you guys how to look for that confirmation in the live market. Now, we still have the European session suspended right now, guys, so we're just doing the U.S. session right now. 7:45 a.m. Eastern Time. We'll see you guys tomorrow morning for that. Tomorrow's a Thursday, so of course we got a free webinar tomorrow at 11:30 Eastern Time. And as always, guys, the beginner's course is a great pickup for anybody looking to get more information about our 3-week trial. So the beginner's course will get you guys started. Let's take a look at some of the trades we took today. Now today, like most FOMC days, can be a little bit different than most days. Typically speaking, FOMC day is characterized by having a lot of volume between 9:30 and 10:45, and then getting very slow in of course, anticipation for FOMC announcement at 2:15 Eastern Time on Fed Day. So we normally see good volume in the morning, and we usually have to be just worried about the lunchtime session setting in early. The last two, I think 3 FOMC days, though, have been slightly different. Rather than seeing a lot of volume at the open, we've been seeing volume towards the end of the morning at about 11 o'clock, 11:30. So just be aware, this is kind of a structural change we've been seeing over the past couple months on Fed Day itself. So be aware, right, that's kind of a small change. Lower volume in the morning. We saw, of course, after 11 o'clock, the volume picked up. So a little bit different than normal, but we were able to grab one trade here. As you guys know, very slow, choppy market this morning. And first trade of the day, guys, 11:17. This is a breaker short. Entry here was 80.46. Now you'll notice, guys, we broke below this horizontal red line. Broke below those trend lines. We got held up by some support there, 80.5. And then when we broke below that support, we made a swing low there at 49. We broke the 49 level on this breaker entry short. Filled at 46. We got 4 ticks, 8 ticks, and 3 ticks, and of course 19 ticks there total, for a total of 190 there. So there's your one trade we took today. Now we had another pattern develop only about 5 minutes later. Right, just after 11:30 here, 11:35, we saw tons of volume come in at 11:30 as we usually do. We broke below this 80.35 level. We made that swing low there at 80.28, and we broke below that swing low for this breaker short setup. Now this was kind of a tough trade to take. We had already watched as the crude market was very flat, very quiet, and we were very thankful, to be honest with you, that we got that one good trade. So we have to be, reality check here. We were looking at a very slow market, and at this point, going into the end of the morning, we were all very concerned about making a bad decision and giving that money back in a market that we knew was going to be challenging today. So the second move that set up, it gave us some mixed signals. Price was moving down, but momentum dried up quickly and reversed back against us. So it gave us some mixed signals against our rules, which made it a higher risk trade. I chose to stay away from it. I skipped it. But boy, as you can see, the pattern worked out wonderfully. A good large handful of our members, though, grabbed it. So congratulations to all of our members who made some pretty good money on that one, too. But basically, guys, wrapped it up here, and we did trading afterwards. Very tough market this morning because we didn't have much volume to deal with. But as you can see, guys, 19 ticks there total here on crude. Now, as always, guys, we'll open the room back up tomorrow morning at 7:45 a.m. Eastern Time. We'll show you guys live calls with entries, targets, and stops. Plenty of time for questions, so bring your questions, and we'll give you a free 3-week trial to come out and join us for absolutely free. Beginner's course is highly recommended for all free trial members. Please rate and comment on this video. My name is Joseph James. Hope the video helped, guys. If you want more information about lifetime membership, drop us an email, sales@schooloftrade.com. And guys, we'll see you in the room tomorrow morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.